Intel has been downgraded by analysts and stock has been crushing and it keeps falling. The question is this a good buy or a buy? Coming up. Welcome back. As you know, the outlook for Intel has been terrible. Future revenues will be between 73 and 75 billion, the management said, but their revenue in trailing 12 months and in 2020 has been around 78 billion. So obviously Intel's outlook for lower future revenues is not very good for the stock price. It's not too exciting to give a lower guidance on revenue when your competition has been completely crushing it. Let's look at the numbers and see what we should expect. Revenue for trailing 12 months have increased from 77 to 78, but it's been approximately the same, 77.9 almost and 78.5. But in the future, this will be falling. All right, let's look at the net income or net earnings. And you can see in 2018, net income jumped massively. I don't know if this was some kind of acquisition or not, but then since then, it has not been too good. I mean, it's been trickling, but not terrible. It's okay. Let's look at the gross profits. Gross profit margins right here are about 58, 56, 61 here, average about 58. But management did say that this will fall up to 10% in the future. So this will be about 51 to 53. And that's pretty bad because this will directly hit the profits. So lower overall earnings, lower revenues are expected. Already shrinking profit margins are going to accelerate to decrease. So that's a pretty sad picture of a slowly bleeding, dying prey of a competition. Now let's look at the balance sheet. As you can see, current assets are 47 billion and let's see what are the current liabilities. 25 billion approximately. And what is our current ratio, which is current assets over current liabilities? It is 1.9, as you can see right here. And this is a very good number, 1.9, closer to 2 or higher. And this means that they can pay off their current liabilities with no problem right away if they need to. Now let's continue to long-term liabilities. Over here, which is long-term liabilities minus current liabilities, and it is 47 billion. Because this is for the long term, we need to make sure that they have enough cash flow to be able to pay their long-term liabilities without a default. And if we look at the cash flows, free cash flow, you can see 14, 17, 21, and then bam, back to 17. Even though it's down to 17 for trailing 12 months, they still have enough to pay their long-term liabilities in about 3 years or so. That's very good. Here is another metric for Intel, which is a very important one. Right here, you can see they have been buying back shares. And this is another great insight into the future of what management thinks about the company. They are buying back their shares like crazy because they believe this company is a very good valuation at these prices. So they're buying it back because they believe it's going to go up in value in the future. And this is very important because as they are buying back their shares, they are increasing your ownership percentage as a shareholder instead of diluting you like crazy. Like Tesla, for example. I mean, that's just funny or not funny at all. But yeah, this is really good what they've been doing. You can see they've just kept on buying their shares back. And yeah, this is really good. As far as their return on invested capital, it is about 17%. Let's see right here. Yeah, and it's been 21, 20, 19, 18 almost. And it may seem low because for the same time, S&P did what? I don't know, 25 or 30%. But it is pretty good because it has been relatively consistent. And finally, overall about this company, I think it will still have some headwinds because it is one thing for the management to say that, oh, we're going to do all these amazing things to improve the business, to do all these changes. But it's completely different to actually execute on the plan and deliver on the promises. For this reason, I don't think this is the best stock for short term. But I'm a long-term buyer, and I believe for next 2-3 years, this will be a great buy for me personally. Look, these dividend they have right here, even though it's pretty tiny, 1.2, 1.26, 1.3, 1.37, but it is growing. They have a pretty good free cash flow, and it is certainly enough to cover the above mentioned dividend. Current ratio indicates a healthy short-term financial position, so I am a buyer of this stock at these levels. I will not buy the full position right now, but I will buy a quarter position and keep buying on its way down if it will keep diving in the near future, which is very possible. And if it will start exploding, even better, because I have a really good margin of safety right here and I'm happy with it. I am not in rush. My plans to sail around the world while investing in businesses is about 2 years away. So I still have time to patiently wait and enjoy the ride. All right, so if you got anything out of my work that you found valuable, please don't forget to like and subscribe before you click away into the abyss of the tube. And I hope I will see you later. Cheers.